Hey, what's up YouTube? Fritz Jones Investing back with another video, and today we're going to be talking about how the Ukraine and Russia crisis has been going. We'll also talk about some stock news. We'll talk about how my portfolio has been performing. It's now worth $57,000. And then finally, I'll leave you with some dividends that I received for the month of February. So if you found this channel helpful, please don't forget to like, comment, subscribe. Let's get right into the video. So I was reading some articles on the Ukraine and Russia crisis talking about how the U.S. was placing more sanctions on Russia, and I came across a CNBC article, and it talks about how the Biden administration was announcing sanctions against Russia's central bank on Monday, which would prohibit Americans from doing any kind of business with the Central Bank of Russia. And also they're going to target the National Wealth Fund of Russia and the Ministry of Finance of the Russian Federation. One of the Biden officials wanted to talk on the condition of anonymity, and he says, and I quote, "We wanted to put these actions in place before our markets open because what we learned over the course of the weekend from our allies and partners was the Russian Central Bank was attempting to move assets, and there would be a great deal of asset flight starting on Monday morning from institutions." And he says also, "Our strategy, to put simply, is to make sure that the Russian economy goes backwards, as long as President Putin decides to go forward with his invasion of Ukraine." Very interesting. Later on in the article, it says no country is sanctions proof, and Putin's war chest of $630 million in reserves only matters if he can use it to defend his currency. The Russian ruble fell to 111 on Monday, down from 83, which is a drop of more than 20%. So as the Russian ruble fell, it prompted an increase in the rise of the interest rate. So the interest rates went from 9.5% to 20%. This is designed to keep the cash in the Russian banks because it's cut off for the rest of the world. And the U.S. and its allies also look to block Russia from the SWIFT, which is an extraordinary step that will sever the country from much of the global financial system. Now, unfortunately, our stock market did take a hit, down about 600 points a day off the Dow Jones, as oil prices continue to climb over the $100 mark, hitting as high as $105, $106 for the day. Now, these are some live looks of some satellite images of Ukraine. You can see that the Russian forces are moving in on the capital city. This chain of vehicles is around 40 miles long, or at least that's the report I was reading. I'm hoping that Ukraine can continue to stand and fight, and that the U.S. and its allies in NATO can continue to provide supplies, machine guns, bombs, whatever it takes to kind of thwart off this invasion. These Ukrainian people don't deserve this. I'm standing for Ukraine now and forever, and I'm praying that this issue can be resolved so people won't have to die. This is a live look at my portfolio today. You can see that the value is worth $57,835. Sorry, switching gears a little bit here. You can see that for the day I was down $475. For the past week, I'm up $909. For the past month, I'm down $3,732. Hurtful there. For the past 3 months, I'm really taking a hit. I'm down $12,806. And on January 3rd, the portfolio would have been worth its highest at $70,000. So I'm definitely off my all-time highs. But this is giving me a great opportunity to invest in some great companies and kind of weed out the companies that aren't as profitable. For the year, I'm up $2,488, which is a positive sign. I do like that, but I wish it was definitely up to that $70,000 level. As far as an all-time return, you can see that the portfolio has been up $11,739, or up just around 25.5%. Definitely looking forward to more gains this year. So next, we'll talk about the dividends that I'm receiving for the month of February. And the first one is Lowe's for 1.31 shares, and at 80 cents per share, I was paid $1.05. This is the most I've ever received from Lowe's. I like investing in Lowe's because it's a dividend king. They've continued to increase their dividend for at least the past 50 years. So I'm taking that money and putting it right back into Lowe's to hopefully increase my position slowly but surely over time. Next up is Medtronic. On February 7th, I was paid 6 cents from them. Now, since receiving my dividend, I did release my position and sell the stock. The stock has not been performing particularly well. They've had a lot of litigation in their past. So this is going to cost the company at the end of the day. So I did release my position and put that money towards other stocks. Next up is Agnc Investment, which is a real estate investment trust, a REIT. So for 85 cents and at 12 cents per share, I was paid $10.20. I'm going to take half of that money and reinvest it back into Agnc to increase that dividend over time. And I'm going to take the other half and invest into high quality, highly performing stocks such as Apple. Next up, speaking of Apple, I was paid $16.68 from Apple on February the 10th. At 22 cents per share for almost 76 shares. I have increased that position to up to 77 shares right now. Hopefully, Apple will increase their dividend in their next quarterly earnings report, hopefully up to 24 or 25 cents to continue increasing my position in Apple. Next up is Abbott, which is a healthcare stock. So for 0.27 shares and at 47 cents per share, I was paid 13 cents. Abbott is one of the dividend aristocrats. They've been increasing their dividend for at least the past 25 years. So I'm going to take that money and put it right back into Abbott to hopefully increase that dividend more so over time. Next up is another real healthcare stock. It's AbbVie at zero point 0.3 shares and at $1.41 per share. I was paid 42 cents. This is another dividend aristocrat. They've been increasing their dividend for at least the past 25 years. A great stock that continues to perform well and exceed expectations, but that doesn't get talked about a lot. I love AbbVie, and I'm going to continue to increase my position. Next up is Procter Gamble, which is kind of like the consumer staples sector of the stock market. So for zero point 0.27 shares, I was paid 23 cents. I'm going to take that money and reinvest it right back into Procter and Gamble and hopefully increase that dividend over time. Next up, I hopefully hope to get at least 50 cents from Procter and Gamble. Next up is another real estate investment trust, more so in the commercial sector. So for 28.1 shares and at 12.17 cents, I was paid $3.42. This is a monthly paying stock. So every month I'm getting at $3.42. I'm hoping to increase that amount to at least $5 per month by the end of the year. Next up is another real estate investment trust. This is EPR Properties. They invest in properties such as movie theaters and warehouses. So for 0.4 shares, I was paid 10 cents. This is another monthly paying stock. So hopefully that amount will increase over time. Hopefully I will hope to get this to at least $5 per month by the end of the year. Next up is once again another real estate investment trust, which is Realty Income, probably the most popular one. So for 2.35 shares and at almost 25 cents per share, I was paid 58 cents. I'm hoping to get this to at least $5 per month. I think this has been one of the best performing real estate investment trusts as they continue to increase their dividend over time. I believe they've increased that dividend over 100 times. Main Street Capital is a business development corporation. So for 4.3 shares and at 21.5 cents per share, I was paid 92 cents. So I'm going to continue. This is another monthly paying stock. I'm going to continue to increase my position in this particular company also. And they pay special dividends twice per year. This is another technology finance stock. So for 1.4 shares and at 10 cents per share, I was paid 14 cents. Now I've doubled up my position since then. So I'll at least be getting 30 cents next month. This is a monthly paying stock. Really like and appreciate what this stock has done for me thus far. And I'm continuing to dollar cost average into the stock also. Another business development company is Prospect Capital. So for 129.5 shares and at 6 cents per share, I was paid $7.77. My goal for this stock is to get to $10 per month and then slowly take those dividends and reinvest half back into the company and then another half into highly performing stocks. So this is kind of more so a dividend play for me. Caterpillar, which is a company in the infrastructure sector of the stock market, for 0.25 shares, and at $1.11 per share, I was paid 28 cents. Now, this stock has slowly been decreasing over time as in its stock price, so I'm continuing to average up my position while bringing down my dollar cost average. Next up is Costco in the consumer staples portion of the stock market. So for just over half a share and at 79 cents per share, I was paid 40 cents. Hopefully by the end of the year, I'll be able to get to at least 1 to 1.5 shares of this stock. Costco has continued to increase their dividends. They treat their employees very well, and they have a very great business model, which is a subscription-based model, which I love. Shaw Communications is a real estate investment trust based in Canada. I have released my position in this stock since then. So for 1.4 shares, I was paid 9 cents. I did have a little bit of that stock withheld or the dividend withheld because it's a stock based in Canada. I felt that the price was too high and the dividend was too small, so I did sell that particular position. Next up is Starbucks, a coffee company. So for just under half a share and at 49 cents per share, I was paid 23 cents. Now this stock price has been decreasing. I believe it's in the lower 90s right now. When I was buying it, it was in the 120. So I'm dollar cost averaging and continue to increase my dividend over time. I really like Starbucks and I believe they're going to perform well. LTC Properties is another real estate investment trust. It's a monthly payer, and for 1.65 shares, I was paid 31 cents. Since then, I've been able to increase it to at least 2.5 shares. So hopefully we'll see that dividend a little bit higher in the next coming months, hopefully around the 50-cent mark. Next up is another commercial real estate investment trust. This is Gladstone Commercial. So for 1.65 shares and at 12 cents per share, I was paid 21 cents. Another monthly player. Hopefully I'll be able to get this to 50 cents at least by the next month and hopefully $5 per month by the end of the year. Really like this company. It's performed relatively well in a bearish market. This is SPHD. It is a ETF, and for 4.7 shares and at 14.26 cents per share, I was paid 67 cents. This is a slowly growing stock. It's kind of doesn't have much volatility, so stock price really doesn't change. So this is kind of just a dividend play for me. Hopefully, I'll be able to grow this to at least 75 cents by the next month. So I'm interested to hear your thoughts. What do you think about the dividends that I received for the month of February? Do you think they're good companies to invest in, or would you put your money elsewhere? Also, what do you think about my portfolio? Now, the last portfolio update that I did, my portfolio was worth $64,000, and now it's down to $57,000. My plan is to continue to invest in high-performing companies such as Apple, Tesla, Target, companies that continue to increase their dividends over time but are very profitable, and then blue chip companies that may not necessarily get talked about all the time that are great values with a decreasing stock prices. This has been Fritz Jones Investing, always reminding you to decrease your liabilities and increase your assets, and also continue getting that passive income. I hope you enjoyed the video today, and I'll catch you next time. Peace out.